Guys, good morning. May 27, 2020. It's a Wednesday, and we got too many signs to be ignored. Guys, load up on these puts today. There's too many sixes moves that we're noticing over the course of the last 2 weeks. It does not happen very often, and every time we have too many six behaviors going into the close, like yesterday again. By the way, congratulations. Some huge profits were locked in. I've talked to some traders locked in over 600%ers in the last 30-minute move of the trading session yesterday, so good job, guys. But also important to understand, it's not just every six type move that you got to jump on that predicts further drop in the market, but when the evidence is overwhelming, especially when it is combined with a ton of head and shoulder patterns on the 5-day, 15-minute chart, guys, I'm going to show them, all of them to you right now. This is absolutely insane what's going on right now. The situation in Hong Kong is still escalating every day, every hour, but the market has not responded yet. So when it does, we can see a very, very fast and very sharp move lower. Now, semiconductor stocks, okay, they are about to flop, kind of like what they did back when Trump announced the tariffs for the very first time in like February, March of 2018. All these semiconductor stocks dropped like rocks very, very fast, very viciously, and I think that's exactly what's about to take place again. Now, another thing that points to a huge drop really within the next 72 hours is gold, guys. On one side, it may look like gold, correlation between gold and SPX all of a sudden evaporated. It's no longer there. S&P keeps moving higher. Gold keeps dropping lower pretty much every day over the course of the last 5 days. Guys, last time we've noticed this gold chart was a predecessor to the entire stock market dropping. So the correlation has been very meaningful between gold and SPX. Every time gold drops, SPX drops. So it looks like correlation is temporarily lost. But this is just a 3-4 day, 5-day delay effect, guys. Gold keeps going lower every day is actually pointing to the fact that SPX is about to drop as well and follow gold on the way lower. Now, and another thing that I'm not sure why nobody's talking about it, but if the vaccine prospects are so good, why the heck does the stock of mRNA keeps dropping every freaking day? Okay, so mRNA, guys, at this point, we've recommended first shorten this damn thing when it was in the 80s. At this point, pre-market, the stock is trading like at low 50s. It's time to collect profits on this. The stock is down, almost 40% since we suggested shorting this thing. LRCX, guys, there's going to be huge moves in LRCX. If you've been shorting it, it's been making some good-sized drops, $10, $12 drops in certain days recently. But we're yet to see a drop where LRCX is going to crash like 30, 40 bucks. Okay, within a very short amount of time, like within 1 day, within a few hours. Okay, so that's coming. NVIDIA, we could see NVIDIA under 300 bucks here within the course of the week. It's still trading around 350 bucks, guys. This is an awesome opportunity to get in. Apple, okay, BKNG hit yesterday our target level of 1750, which we said, hey, start buying puts on BKNG when it does. So the time is here. And Shopify, guys, it's another key leading stock. I mistyped. I didn't put in Amazon here, guys. Amazon is doing really good. This 2,400 strike puts that we suggested yesterday, they're racking up some huge gains at this point. So some of the things to also pay attention is the key levels that we've described in the lengthy historical analog video just a couple of days ago, okay? We're noticing some further signs why it makes sense right here, right now, to load up on puts, and that is the black candle formation right against this key level on the chart of the S&P 500. So look, that black candle with the tail sticking out, the failed rocket candle, that was created yesterday on May the 26th. All right, and it looks like we've got an exhaustion gap going on at the same time here. So these are really good conditions, okay, that tell you, look, the market is going to struggle. It's not just going to slice for this resistance level like knife for butter. It's going to struggle here. So possibly, we could head for a move 11 at some point intraday, but it's going to fail. So anytime you see a bounce in the markets today, guys, just short it. Just short this market because we could be heading substantially lower over the course of the next few days here. So the black candle right against this technical level that has huge significance, that is what actually took place yesterday. So head and shoulders in all key stocks. In all key stocks that have been moving this market higher and higher, guys, look at NVIDIA on this 3-day chart, guys. Look, head and shoulder pattern, very well defined. The next move is lower. Apple fails twice, guys. When you see Apple doing these things, and it's especially noticeable in stocks like Netflix and Apple, when they're topping pre-market, they'll have these crazy moves higher, right? That was yesterday. Move higher, huge gap pre-market, but on low volume, and then the sell-off begins. Look what happened so far pre-market today. Huge gap higher again on Apple, and look, pre-market, it's already closing this gap. Guys, these are signs of a top. So you got pop, drop, within a head and shoulder formation. Guys, this is a TRO. This is a trend reversal on Apple. This stock is about to crash. Okay, same thing on Amazon. Guys, all of these stocks are making these head and shoulder formation at the same time. We're getting the black candle. Okay, and they're still trading like Amazon's still trading pretty much close to all-time highs. This is the opportunity of a short seller that you've been waiting for. Head and shoulders at all-time highs on Shopify. Look at this. All of these stocks that have had substantial run-ups and appreciation over the course of the last 30 to 60 days, they are failing miserably at these all-time highs levels. Now, let me ask you this. It doesn't matter if you've been trading for a long time or not. What is the best time to short something? All the way at the damn top. And that's exactly what we got. So when the market opens, be ready. Be ready to pull that trigger and get some short positions, guys. This is how pretty much every stock looks. Okay, look at Shopify. Okay, 850, 840, and it fails. And it fails on big volume. At the same time, the MACD is making this death cross formation. Wow, everybody that could have bought Shopify already down some. Guess what they're going to do now? They're going to sell. Okay, so perfect opportunities across the board, guys. Another important point I wanted to bring to your attention is last time we had conditions where both Amazon and Shopify had substantially negative characteristics developing on the charts at the same time when Trump initially began the trade tariff war with China. Considering that we're currently looking to place sanctions on China, it makes sense because, good, most of the goods on Shopify, where do they come from? They come from freaking China. Most of this shit sold on Amazon, where does it come from? It comes from China. It would make sense, okay, that it doesn't mean that Amazon is going to crash here and get slashed in half. What I'm saying is it's a negative. It's a negative from the retail standpoint perspective to both of these companies, okay? And yes, they don't derive all of their income. Most of the income in Amazon comes from AWS, for example. In Shopify, it's not that every participant that creates a site, merchant site within Shopify sells, necessarily physical goods. Some of them sell services, but a great number of these people do. So that's a definite negative. Any type of escalation between U.S. and China, from standpoint of sanctions, it could be retaliated. It could be a huge negative for Amazon and Shopify. And this is just the beginning. This is why both of these key names, okay, in the technology sector, they're drawing this head and shoulder formation. They're topping at the exact ideal moment. So this is something to take a note of. And guys, this is the question of the day. If the vaccine prospects are so good, why the stock keeps dropping? It's a divergence. Look, they keep talking how the market keeps going higher every day on what? On hopes of reopening, on hopes of the vaccine. Well, if that's the case, then why is nobody buying the best prospect stock that supposedly can create vaccine this year by the end of 2020? Why is nobody buying it? Why does it keep dropping? We said short it right here. Now, the stock dropped from the 80s all the way. Look, guys, pre-market's at 55. It's likely to touch 50 today. When it does, cash out, lock your gains on this one. Okay? Today, we'd like to get a repetition of yesterday's move. Okay, pretty much the market could be stalling out, making a move higher intraday, but ultimately, we're going lower by the end of the day. And this gives us a high probability, guys, of repeating. I'm going to show you in this market move section, okay, how within one move yesterday, we have all the characteristics of 3 of these moves, 2, 11, and 6, depending on which time frame you look from and what detailed angle you're taking a look at, like the 1 minute or the 5 minute and so on. But all these characteristics are there, so we're likely to get a repeat of the behaviors of these moves, which all of them, 2, 11, and 6, guys, they have one thing in common. They are topping moves. They're saying to us that the market is at the top. And when you get them back to back on multiple days, And the pre-existing conditions is such that we've been getting them on pretty much a lot of instances over the course of the last 2 weeks. You put all these things together, you combine them with the head and shoulders patterns, you combine them with these charts from the historic analog. Guys, this is the damn top. So let's rock, okay? The summary from yesterday's chart, guys, we're failing that level, right? So yesterday at one point we got to 3,012 on the S&P, and we failed the moment we got there. Pre-market, we've actually gotten to like a level of 3,035, and as soon as we got there, we're failing. Guys, this is the top that you want to short. You don't get many opportunities like that. The Hong Kong market is still on the verge of a crash. Guys, yesterday officially we got a move 6. The market still thinks, because the price action is positive, most of the market participants think that everything is good, while indeed there's a huge reversal that is bolted up here. Yesterday, on Tuesday, guys, was a move 6. All right, and this is how it looks. We got this big gap, okay, continuation to move higher. Overall, the market is stalling. The biggest sell-off comes in right at the very end. There's another way to look at this, okay? There's definite behavior of a move 2, okay? The chart pattern, if you just take a look without evaluating the levels from, you know, the prior day, this is a definite move 2 type pattern. But what else is important? If you combine the pre-market action all the way from Sunday night, this is a huge move 11 formation, guys. So this is 6-11-2. Overall, we're locking in as a move 6, guys. This is huge, huge, important. It doesn't happen very often when you get all 3 moves combined in one, guys. This is very meaningful information telling us about where the market's actually going next. 2-day sequence is 4-6, guys. This is where you can see why we're logging in this as a move 6, because you had a huge gap up right here. Then the market basically stalling out, right? It creates top 1, top 2, top 3, top 4, top 5, top 6, top 7, drop. Okay, though we're likely to get more behaviors like this. And once we open with a gap down, which is likely to happen tomorrow, okay, it's going to be very difficult to stop the market because everybody is going to be selling. Everybody is going to be getting out of these names that they've been getting into over the course of the last 30 to 45 days. And when everyone is getting out, you can get some very fast, very fierce moves, very vicious moves to the downside. So this is what we're expecting. We'll combine this move 6 from last week. It was actually on Tuesday as well. This was yesterday's move on Tuesday. So what we've got is, as you can see, the move 6 market manages to rebound, sets a triple top, and then it drops by Friday, okay, losing all these gains. So we're likely getting the repetition of that. So this is the move 6 from yesterday. We're likely to do this. We're running into 1, 2, 3 multi-top formation and sell-off. Guys, the sell-off is going to begin today, so you want to jump on board with these trades. Okay, these topping formations keep repeating itself around the key level of 31.10. And with that said, guys, VIX is staging a bounce. We've been talking about the VIX that's ready to break out. VIX could break out substantially higher at any given moment. So have your positions on. Let's roll. Let's rock. Let's trade. It's time to make it happen. I'll catch you guys.